Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Monday, and this is the 26th of February. I have my head down, and I'm wondering, how's it the 26th of February in Chicago, 70 degrees? I mean, it's insane. Today I went out, put the top down on my car as I had to go somewhere in the afternoon. People are in flip-flops, shorts, T-shirts. It's basically like a summer day in Chicago, and here we are, February 26th. This is absolutely unheard of. It'll be warm again tomorrow, but this is still, you get these weird patches. I would say to heavy snow, it could happen, but it's not going to last anymore. And the reason for that is the ground's too warm. So, wow, that's all I can say. People may not believe in climate change. We're experiencing it. It's been one of the mildest winters again that Chicago's had in a very long time. If the cafes were open, people tonight would be at them. That gives you an idea outside. Wow. And I'm talking the outdoor dining. In the stock indices, it certainly looks like the market wants to consolidate. I'm not going to use the word break yet. I'm going to say consolidate. I've been looking for this to happen against the upper Bollinger Bands. I've made this clear to you in these videos. If you don't know how to use upper Bollinger Bands or lower ones, I have a course on it called Advanced Bollinger Bands. Just move your cursor at any time up here to it. At the end of this, there'll be a video about it, and you can go to our website, iraepstein.com, under education. But you look at that, you can see that the market is just sort of stalled out. Obviously, everybody wants the next NVIDIA. NVIDIA is really how you say it. And the simple fact is, how? They're rare. That's all I can say. And, I was today getting some therapy on my back, actually. I threw it out over the weekend. And to make I'm with the therapist, and as he's working on me, he's going, well, my wife and I bought a couple of shares a while ago. I should have bought more. I'm going, everybody should have bought more. He said, but you know what it was? I said, I've known about the company forever because in computers that I have had, we used their game boards because of the graphics. Did I think AI with it? Frankly, no. I mean, I didn't see this coming. I wish I could tell you I did. I wish I could tell you, boy, I'm the brightest guy in the world, and I just made what Nancy Pelosi's husband did $1.5 million on it. That was in, I think it was Bloomberg today. All right, whatever. Bright guy, did his job. All right. Bonds and notes getting a small rally, but there's a lot of data this week. Also, we aren't through. We might see a government partial shutdown come Friday. So far, there's been nothing that I see that says the Republicans or Democrats are getting together. I don't know that the Republicans want to swallow a pill of another extension or not. My guess is they wouldn't. They would rather get to a few days of a partial shutdown and then before a full shutdown, see how much they can get from the Democrats. Tomorrow, President Biden is meeting with the leaders of the House and the Senate, and he's going to try to broker a deal. He is the problem. If he would give in, and I have no idea why he's so stubborn on the border. I haven't the slightest idea this whole thing would go. Nobody's explained to me what it is. And I've asked many of you to write, and I don't get it myself. I just can't figure out why he is intent to let all these millions of people in that are basically undocumented, tell me they're going to show up in courts and so on for whatever it is. Are you crazy? And I know in Chicago we're seeing crime go up on some of this. I'm not saying all of it by any stretch, but it makes the headlines, and that's the problem. And people look at it and they're going, what are you doing? Now they're saying, if you see people on the corners, don't give them any money, so on and so forth. These people want to work. We should have brought them in and given them work permits. So gold trying to be up, dollar sort of stable here. You can see the foreign currency market just sort of hanging in there, not doing a lot one way or the other. And when you look at the S&P, okay, so it's down 0.5 percentage point from its all-time high close. Whoop-de-doo. More important to me is you seem to be stalling a little bit. That's why I'm using the word. I didn't say this market has peaked out, it's ready to break and all. I think you're beginning, the potential is there for consolidation. You still have the uptrend, higher lows and higher highs at work. You're still over the 18-day average of closes, and you have that pattern you can see where it's higher lows, higher highs. And you have paid attention each time we've rallied, and we've had these mini sideways actions, but then we seem to come back and make new highs. But the Bollinger Band is doing its job of giving you an idea where the resistance points are each way through this. You're not embedded. There's a difference. When you were doing these higher highs each time, you had an embedded reading. You don't have it now. That's why I lean to the idea that we're getting a consolidation phase that might be ready to hit the market, and that's not a bad thing. That's a good thing. When you look at the NASDAQ, you're overbought. You hit the Bollinger Band, you stopped again. You did it back here. But again, you were embedded, then you lost it. And since that happened, you haven't been able to hold on to rallies in a big way. You made a lower low, then a higher high. And just like the S&P, you got a couple of days of consolidation. The same thing is happening against the upper Bollinger Band right here in the Dow. So you don't have to agree with me that that's the number, but it's hard to deny that coming against that, that's where the zone seems to be this time. And the difference being when it was doing this, embedding, you could run against it. Now you're just sort of hitting it and backing off. That's often a sign the consolidation's going to take place. In the Russell, again, I was listening all day today in the background to CNBC, and there's people going, I am picking individual stocks within the Russell. That's going to be your next big winner when the Fed cuts interest rates, because 40% of the Russell companies typically operate at a loss. I don't know if you're aware of that. And interest rates for these smaller companies are a real problem for them. So yes, I do agree that when the Fed cuts, but nobody seems to know when that is, starting with me. I'd like to be at the head of that parade. I have no idea when the Fed will or won't cut its rate. All I know is right now the economic data is stronger than warrants a cut. When I look at the 10-year note, we have rallied into the resistance of the 100-day average, and you've stayed with an embedded reading. So this is still a bearish tone to this market. Now, if and when the red line closes over 21, I wouldn't want to be short anymore. But right now, I think the pros are still on the short side of this market, and I think they're doing the same identical thing off the slow stochastic embedded in the 5-year note. And I see the resistance a bit higher here, closer to the I don't know what that is, the 106.19 level, right in that zone, 106.20, right in that zone. In the dollar index, you can see that the battle has been now for 1, 2, 3, 4, including today, 5 days between the green line, the 100-day average, and the 18. The trend is down. The bias is down. If the market lets go here, then I look for 103.24 to 103.08 is the next support level. So far, it hasn't let go. If the market can get back up and over and close over the 104.02 area, the last high was 103.97, but I would want it over the 18-day average, I'd get bullish again. So you're right at a cusp here as to what the market might or might not do as I see it. The euro's the flip-flop. It is fighting between the upper Bollinger Band and the 100-day average, not the 18. It's made itself a little bit higher of an area, but it is getting itself overbought. It's got a 73 reading. Any reading over 70 in the slow stochastics, I think, is overbought. In the British pound, higher lows, higher highs, and again, an overbought market. So why are these markets wearing out their welcome? Well, we do get a lot of economic data over the next few days. I think that'll give us the story as to what they're doing. I got faked out in Bitcoin. I didn't think you were going to get this big rally today. It looked to me in the morning especially like you were going to come down to the 18-day average. It didn't. So this is one of these markets that caught everybody by surprise. You're back to $55,000. So this is a new high for the move. I'm not the only one that was surprised. But the way that I teach charting, you're never going short over the 18-day average. So it's one thing to not want to be long, a very different thing to want to be short. Now I'm looking at changing in the spread. I've moved to the May Brent versus the May WTI. And that's because the April Brent crude oil goes off in a day or two. So it's time to look at this. The differential's around 467. I'm looking at the charts today, and they held beautifully key areas. In the May Brent, it came down, it held the 18 and the 100-day average and spun back up. I don't see a trend here. I see a market that's trying to hold on and a bit in the overbought territory. You did the same thing in the April WTI. You have more time to trade that one. And it spun back, and it's not trending. So you got higher highs, lower lows. Difficult call right here. I mentioned over the weekend, what do you do with the Houthis? All right. Are they going to keep attacking Red Sea shipping if a deal is reached with Israel? Israel says it's waiting on Hamas to accept or deny the terms of a deal. If that happens, could it be 6 weeks of peace? Could there be hostage exchange? Could this be a ramp off the war? I don't know. I don't think anybody knows. I know the PLO is trying to change leadership, but it doesn't work if the head people stay in. The man that runs it, I think Israel's demands are right. You need to get new people in there. The government, most of the heads, except for the head of the PL, the Palestine Liberation, he doesn't want to go out. He's looking at the others. His own people only give him a 20% favorability rating. So how are you going to get anywhere with that? That becomes the problem. And we'll see where it goes. So far, a very difficult situation. I don't think anybody has a handle on it. But I do expect that OPEC is going to basically just hold the line, keep their 1.9 million barrel cut. And I think it's a good part of this year. All right? If they release more fuel on the market, they'd probably break it. In nat gas, is that all she wrote? It can't even get up to the 18-day average. Not very impressive. This market starts down under 168.30. It could be a real problem, and you could be looking at even lower prices. We know there's plenty of this on the market, and think of the time of the year. You're going to quickly get to the point where demand starts coming down. Today, was my heater on at all in my home? I can promise you it was not at 70 degrees. So think of all that. And it's not just Chicago. It's moving through the country. It's an unusual warm spell. But it is February 26th. Don't think it'll last. Mother Nature will come back and punish us a little bit. We know that we're getting spoiled. So if you'd like to learn about Bollinger Bands, and I think you all should, how do you do it? Well, I have a course. It's called the Enhanced Bollinger Bands. It's on our website at iraepstein.com under education. You can move your cursor up here. And here's a bit of an ad about it. And anytime during that, just move your cursor up and you can watch and see what we talk about. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.